Welcome back, everyone, to Mike on Money. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us again today. This is a special edition of Mike on Money. I really wanted to touch base on follow-up on our last or start of this week video on 2021, the market bubble, and wanted to talk a bit about this phenomenon, this new trend we're seeing in market bubbles or in the market, specifically using as an example the stock GameStop, as you see over my shoulder here. If you listen on the podcast, thanks for joining us. So if you've not heard of what's going on in the market, I'll give you some backstory just so that everyone's up to speed. We did talk about it on our live webinar on Tuesday, which you can also find that video on our mikeonmoney.com portal or on our YouTube or our podcast. We went into a bit of detail, but I want to talk about it a bit further here today. And basically, so to back things up, so GameStop, if you're not aware, is a company in the United States. It's a brick and mortar retailer of video games where the traditional, you go shopping, you want to go buy the DVD for your latest game for your console. You go into these stores and buy it. In Canada, it would be equivalent to what we call EB Games up here. Maybe you've gone in, or maybe you have kids or grandkids that shop there. But over the last few years, and especially during the pandemic, buying video games has predominantly shifted to an online platform. So you either download the game or you're going to subscribe to a particular service, whether it be Xbox Live or Steam or Apex, or there's several out there. So pretty much gaming has moved to an online platform. So the brick and mortar retail shop, has not been doing well, to say the least, especially through the pandemic. And their stock has been suffering as such, getting as low in January to about $4 a share on the US exchange. And the company, anyway, rallied up to about $20 a share. And this company called Citrix out of California, I'm not going to dive too much into them. They have a reputation of putting out short reports. So these are companies that will put out a report saying, hey, this company's stock is way overvalued. It's going to go down for all these reasons, or it's going to go bankrupt, or just a negative review, and they'll go short the stock. So basically, they'll sell the stock without owning it. So they'll sell the stock in hopes that it goes down. They buy it back at a cheaper price. So the opposite of buy low, sell high. They sell high, buy low. So they've been pretty famous, especially their CEO, for not damage, but maybe accelerating the downturn or downfall of companies' stock by putting out these reports, encouraging other institutional or investors to go short sell or sell the company, driving the stock down even faster. And, they buy it back on the cheap and make their profits. So they have a reputation out there of, taking advantage, potentially taking advantage of the fact that, they put out these reports, they get people to gang up on a stock and drive it down. So they don't have a great reputation, for the most part when it comes to the investment community. But that being said, that's their business model and that's what they do. I'm going to put that argument aside. That's not what we're talking about here today. So what ended up happening is a online forum called Reddit, where people, mostly younger people, will go, and there's subreddits that basically are call it a blog, where people can go put comments, usually around a specific topic, ask questions to people running it or people on there. Anyway, it's a forum for discussion, basically. A very popular one, especially amongst the younger generation. A group on subreddit, which has been around, this subgroup has been around for a long time, but they decided that they were going to go against this short recommendation and basically rally the troops to support GameStop, basically go buy the stock. So when they started doing this, as I mentioned, the stock had been at $4 and had moved up to $20. I'm actually not sure the dates of when they started to put this recommendation out. Certainly was around the $20 range when it became more popular. And in troves, people started buying up GameStop. Smaller volume purchases, but more and more purchases. To the point that the stock rallied from at least the $20, if not lower, but from the $20 level, spiking on Monday at about 140, 145, falling back to the $70 to $80 range. Now, this caused some problems for the people who are short, because if you're short that stock and at say $20 and it shoots up to 140, you've got to put up margin to cover that loss, because you've now, you've sold the stock at 20, you have to buy it back at $140. You every share you purchased, you would have lost $120 a share. So you would have to put up more margin. So sometimes it's called a margin squeeze or short squeeze, where you have to start buying in. And of course, as you have more buying volume, it will drive up that price even further. Now, keep in mind, GameStop was one of the most shorted stocks on the US exchange. So already there was a lot of people that were short out there, and this Reddit group, or this group out there, continued to buy. And then Tuesday we saw it rally even further, going up over $200 a share. In the aftermarkets, it went up to over $225. And then this morning, Wednesday, January the 26th, we saw it go through 380, or hit a peak about 380 a share. It's come off those highs. I think before we started recording this, it was just above the 300 mark. So, all those people that were short, or all those institutional investors that were short, have lost a lot of money. Obviously, at least on paper, if they've covered the short, they've lost money. If they're still short, there's opportunity that's going to fall down again when this Reddit or this group of people stop buying up the shares, or the short those covered calls, or sorry, the covered shorts have to be bought back in as people get margined out, or they no longer have the appetite to stay in for it and just cover their losses at that point. So this phenomena of driving up the market, on purpose, basically running up the stock just on volume, obviously not a business case. I mean, not necessarily for the short tactics that were being put in place around this stock, but truly the stock itself at $20 was overvalued. Definitely, there were some business troubles there, so certainly not worth the 300 plus dollars a share it rallied to today. So the story in itself is incredible, that this group of people went out and did that, called the people out on the shorts, rallied up the stock. Some people in the forum have made a lot of money buying the stock and then selling it. There was even some of them that were using call options, using options to buy the stock long, and obviously being able to leverage and multiply that return by using those options. So I think there was one person that had started with 100,000 and we're sitting around 20 million. I think there was another rumor of someone over 100 million that they had made. Anyway, a lot of money being made. The challenge, I think, that we have to be aware, or this leads into our conversation about bubbles, or whether it be a sector bubble or specific name bubbles in 2021, is that this stock is now really overvalued. And whether you bought it at $20 and you're selling it at $300, and you've done great. But if you're the one buying it at $300, because of course every time you sell, someone's out there buying, you might be the one left holding the bag when it falls back down to wherever it falls back down to, wherever this thing lands. After this whole process is done. So, be really cautious. Goes back to our part 1 video on the bubble. Make sure you know why you're buying. Make sure you have an exit plan, when the valuations are at where you think they should be at, and don't get trapped. I mean, if you're going to play this Reddit game, be cautious out there. But also, if you're out there just investing and you see these returns in some names, again, it goes back to knowing why you're buying the stock, what's happening to cause these run-ups, because it's not limited to GameStop. Since then, we've seen the name BlackBerry has also been put on the Reddit forum. They've seen massive gains. I think almost 750% year to date was the last number I saw. Even this morning, we've seen Ericsson out there, and the Blockbuster Video. They were out buying Blockbuster Video, or at least the remnants of Blockbuster Video. And there are several other names that are all going through those rallies today, just today. And obviously now that they know that they have the power to do this, probably not going to see it stop anytime soon. Regulators are looking into it. Technically, I mean, it's going to be hard to say that they're doing something illegal. All they're doing is putting buy volumes on something and driving up the price. They're not misleading anyone with false information as far as we've seen so far. We did see the regulators or the exchange stop trading on GameStop to let the market pause a little bit. And then reopened it again, of course, because there was nothing going on. And we saw the CEO of BlackBerry coming out saying there's absolutely no news or things going on in the companies that would warrant that kind of jump in the stock price. So again, be very cautious out there when you see a big returns on stocks that you can't fundamentally find reasons for it other than just increased buyer volume. Maybe that's an opportunity to take some profit off the table. Don't ever be afraid of not hitting the top. If you were in GameStop, it's funny. My son who's in business school is currently in an investment a virtual investor competition, and he did buy GameStop sub 40 for his virtual portfolio, and he was asking when to sell, and it was over 200 and some odd dollars at the point we're having this conversation. I said, you know what, you don't know where this is going to end. It can keep going, but never walk away from a $40 investment that went to 220 and feel sad that it went higher, especially when it's a bubble or it's being driven up not on fundamentals, so it's going to pull back at some point. Be thankful the profits that you made, or at least take out your principal. You can always leave some of your money in there to see how high it goes, but take out some of your profits if you still want to play that game. I'd say this type of game is very, very dangerous, so be really cautious around that. But if you have any names or a name that gets caught up in this, take those profits out, or take some profits out, and be thankful you had that big win. I hope the executives of GameStop who are really concerned about their future are able to take advantage of this rally, from the stock going from $4 to $380 a share. And I'm hoping that they've been able to maybe retire. So I won't be surprised if I start to see a lot of resignations out of GameStop executives, as potentially they're cashing in on their stock. So with that, I just wanted to give a follow-up to our bubble video that we did on Monday. I thought this was worth to highlight, but also let you know what's going on out there. I don't know where this is going to end. We're going to keep staying on top of it, and let you know of any other names that we hear about. If you have any questions about your portfolios or about this particular, always reach out to us. Go to mikeonmoney.com. Check out our other videos. Again, every Tuesday at noon, we do a live webcast, which is then turned into podcast that evening as well. So you can catch any of those things. Go to our portal. Happy to answer any questions on any of that stuff. So with that, thanks very much, everybody. We'll talk to you again next week. Bye now.